Hello and welcome to FX Bull Academy. Welcome to the market look ahead for Forex and Futures market. Before we dive into anything, when it comes to the Forex market and the Futures market, the dollar index is what we start from. Looking at our chart, we have a monthly dollar index chart. So within this dollar index chart, we then see that we are within a dealing range. And then the market is dropped into an order block within a discounted price. And from here, I'm looking for the market to come into this fair value gap. And what informs me of such, it is that when you're looking at the dollar index, you cannot look at it alone, but you need to look at what we call the bond market. At the moment, what we are seeing with the bond market, it is that the bond market are bullish, right? For the past 2 months, they've been bullish. And when you're looking at your dollar index, you then see that it has turned bullish this month, right? And the problem that I'm having at the moment, it is that the bond is bullish and the dollar is bullish, and they need to be decoupled. The other one needs to be bearish and the other one needs to be bullish. So when the dollar index is bearish, then you need to know that your bond market needs to be bullish. That is how they should be moving. But when they are moving together in tandem, there's a problem. So we are waiting for them to switch places so that when the dollar index is moving high, I'm expecting my bond market to start moving lower, targeting these lows eventually and taking out those lows. But at the moment, they are in tandem. They are bullish. They are both bullish, right? So I'll wait for that. So what does this mean when the dollar index is bullish? What does that mean for other pairs? All right. We'll then start within our Euro USD. Our Euro USD, you will then discover that we are bearish on the Euro USD. What I have here, I have a dealing range high, a dealing range low of the Euro USD, and then we have pulled back into a fair value gap within an order block, and then we've created a CRT within that area. We closed inside. Last week we started moving lower, all right? We'll then go to our daily chart to look at our pair. You will then discover that the market dropped, came back to a fair value gap. We then dropped lower again, then creating this relative equal lows, that is creating liquidity. We've pulled back into a balanced price range, and now the market is starting to push lower. All right, I'm expecting the market to push to take out these lows into this inverted fair value gap, eventually taking out the CRT low, right? So that is what I'm looking at this pair. Then we'll move to your GBP USD. The GBP USD, I'm looking for the very same thing. What I'm looking at from this pair, I'm looking for a downtrend. All right, I'm looking at all these lows as a potential place where the market is going to take them out. The market is taken out this low. Market is taken out this low at the moment. We have pulled back into this order block over here, and we are on our way to the downside. I'll be targeting this fair value gap, then this low, then furthermore I'll be going to those lows. All right, so that is what I'll be looking at in terms of my GBP USD. I'm looking for the market on Monday probably to push maybe high, give us an SMT, and then continue to the downside. I'll be targeting this fair value gap and that small fair value gap from these areas coming down there. That will be it for my British USD. Now, what I'll be expecting on gold. Now, this is something that is very interesting. We'll go to our monthly chart. What you'll see with the monthly chart, it is that we are extremely bullish. Why are we so bullish? You need to understand that the gold market at the moment, it's a safe haven. So everyone, they are putting their assets and into gold. If money fails, you want gold to be your safe haven. So everyone is pumping in money and their assets into gold, because if anything happens to the financial markets, everyone wants to be safe. So that is why we are seeing a surge in this market. So what is happening at the moment, it is that we are bullish, extremely bullish on this market. And if you go to a daily chart, you will then discover that the market last week, we were bullish, and then on Friday, then the market dropped into a fair value gap, right? So as for me, what I'm looking at, because we are bullish, I want the market not to bridge this fair value gap. I want the market to stay above if we are to be bullish. But if the market were to open next week, all right, if the market opens, makes a high, then makes a low, and it closes below this fair value gap, then I'll be bearish up until this fair value gap over here. This fair value gap will be the next target. From here to that fair value gap, from that fair value gap, I'll then see how the market reacts in that area, and then we can take this high. So at the moment, I want to see how the market will then work within this area. So coming back to this area, you will then notice that we are in this area. The market tapped into a key level, then marked the low of the CRT and the high of the CRT. And then our next target, it is that if the market gets there and closes above, then our next area of interest is that one. But if the market comes and closes below this fair value gap, then we'll be looking for the market, we'll be looking to sell into this area. And what will happen then, it is that the market will then respect the newly created fair value gap over this area. What will then happen, the market will open, tap into that, and then it will push to the downside, right? And also you have our inverted fair value gaps within the very same area. You see that. So if the market will then come and tap into these areas and then find support within these PDRAs, and then we are looking for the market to come and take out these lows, then I'll be looking to go up until that fair value gap. Then I'll start resuming my bullishness. But at the moment, I want to see how the market would work around this. My expectation, we are opening and we are going for that high. Then we'll take it from there. And then our next pair that we can look at, we can then go and look at our Nasdaq. As for Nasdaq, on the 4-hour chart, I am bearish. What then happened, the market that other week dropped, and then it took out this order block, which turned into a breaker block. So we took out a high, we took out a low, then we were dealing range high and low on this pair. We were dealing range high and low on this pair. And then above 50%, we have a breaker block. What I don't want to see on this market is the market violating this breaker block. If I have a candle closure above this breaker block, then that will mean that the market has resumed on its bullishness. Then we'll start buying it again, going to the top. But what I'm looking for at the moment, it is that I am bearish on this market. And one thing that is a telltale sign, the 50% of the breaker block, the market is not closing above it. We tapped into it, reject, tapped into it, reject heavily. We are back into that area again with a fair value gap right here. So I'm looking carefully at this market and looking and saying, what does it want to do? But I'm looking for a bearish move. for these coming weeks, up until the market tells me otherwise. But at the moment, I'll be looking for bearishness on Nasdaq and also on my S&P 500. We have the very same thing. The S&P is failing to get into the CE of the breakup block. So what I'm looking at in these pairs, I'm looking for these pairs to respect these areas, and then we drop to the downside. Therefore, I'm bearish on S&P 500, Nasdaq, and then Euro USD. I'm bearish also. And then I'm looking at GBP USD. I'm bearish also. And then on gold, at the moment, we are still bullish up until that fair value gap is violated, then we'll turn bearish. So that will be what I'm looking for these coming weeks in these markets. So stay safe and happy trading.